Hi, this is Ferre with TaxSaleSupport.com with another video from our Tax Sale Fundamentals series. Now, this video is about the third property tax enforcement system that we discussed. So we've already talked about tax liens, tax deeds, and now this will be about redemption deeds. So between these three systems, between tax liens, tax deeds, and redemption deeds, you can basically work within any state in the country. In other words, every state in the United States uses at least one of these three systems. Some might use more than one, but if you learn these three systems, you can pretty well understand how tax sales operate anywhere. So let's talk for a minute about redemption deeds, what makes them unique, where you can find redemption deeds, and how they're different from tax liens and tax deeds. So first, the redemption deed states are in yellow. Now, there aren't too many of them. We have a handful of them here. You can see we have Texas, Tennessee, Georgia listed here. Um, Texas is a big one that gets some attention. So let's talk a little bit about it and how exactly these redemption deeds work. So what exactly is a redemption deed? I think the easiest way to describe redemption deeds is as a hybrid of both tax liens and deeds. Redemption deeds are essentially tax deeds that are sold with a redemption period attached to them. Okay, so essentially what would happen is it is just like a tax deed sale where you are bidding on the property to purchase the property, and the price may be bid up in price if you're competing with somebody else at the sale. If you win on that, here's where things start to change a little bit. First off, the buyer has some rights right away with the property. So, for instance, in uh, in Texas, the buyer can take possession of the property right away. So you could take possession of the property right after the sale. You could even rent it out if you wanted. So you can take possession of the property, but you wouldn't want to sink a lot of money into it because it still has that chance of redeeming. The way that counties do this, I guess, varies from a few different states, but it's related to the way they record the deed. Some will wait. In other words, they'll finish 95% of the process of filling out the deed, but they won't actually transfer over complete ownership until that redemption period has passed. So it has this time period after you purchase the property where redemption could still occur. All right. Now, something else that's different about redemption deeds versus tax liens or tax deeds is the penalty rate that they pay out versus an interest rate. The penalty rate is a flat rate, and meaning that regardless of when it were to redeem, the amount would be the same. It's still a flat rate. So if it were the day after the sale, it would still be that flat rate. It doesn't accrue with time like the way that an interest rate does. Let's look at some specifics here so I can explain a little bit more about how, let's say, Texas works here. So, Texas has a 25% annual penalty rate, okay, which is a pretty good penalty rate if you think about it. This is a flat penalty, meaning that that 25% is applied to any redemption that occurs. Now, the redemption period in Texas is split up according to homestead and non-homestead properties. So when we're talking about homestead properties, every state has different qualifications for exactly what it takes to be homestead. But what I generally use as kind of a rule of thumb is that it tends to be owner occupied. If it's owner occupied, then it has a chance there of being a homestead property. Although, well, a good portion of the time that will be the case. You can always check. But the way that the redemption period works is this: if it's non homestead property, which would include any kind of land or even properties, there are lots of properties with improvements that aren't homestead properties. The redemption period on that is just 6 months. So, what it means is if you were to purchase this tax deed, I mean, this redemption deed, you would have a period of 6 months where you might be able to take possession of the property, but you wouldn't have the ability to actually sell it for at least 6 months. Now, if it were to redeem, what that would mean is that the property owner was able to come up with the money to pay it off, uh, which if they were to do that, not only would you get back your initial amount that you spent on it, but you would also get back 25% in addition to that. And that's true whether it redeemed the day after the sale or whether it redeemed uh, right up to the 6 month mark. Now, that 25%, the fact that you can earn that uh, in 6 months or less, is fantastic if you're looking at non-homestead properties, which is a good way to buy in Texas. If you're looking at homestead properties, then it changes. They want to give homestead property owners more of a chance. Okay, so they extend that to 2 years. Well, the 25% is an annual rate. So what happens is if the property redeems any time within that first year, you get 25% on top. Now, as soon as it enters into the second year, so if it is the first day into the second year, there is an additional 25% added on top of that. So if it were to redeem 1 year and 1 week into it, you would earn a total return of 50%, which is excellent. But it's also a long time to be forced to hang on to a property without the ability to sell it. And that's one of the downsides, I would say, of redemption deeds. There are some upsides and downsides with them because they're kind of a hybrid of both systems. So let's talk about what some of them are. First off, the chances of the property redeeming are fairly low. And the reason for that is consider the process that these properties have already been through before this. They've already been delinquent for a long time. They've already been through the foreclosure process with the county. And if the property owner couldn't afford to pay the taxes before they lost the property to foreclosure, they're definitely going to have a difficult time paying it off after it's been foreclosed on because their penalties and fees only continue to go up. And part of what they're going to have to cover as well is going to be that 25% that is essentially paid to the investors. So it makes it even more difficult, I think, if they've let it go that long. So in other words, it's just at that point it's gone so long that there isn't a high likelihood that they're going to redeem. But if they do, then fortunately, the penalty rate in Texas is pretty healthy, so that's not a bad thing, which is part of the reason why a lot of people enjoy investing there. Now, another benefit that Texas specifically has, and you can also check with some of the other states like Georgia, but in Texas, you can take possession of the property immediately. You could start renting it out. You can basically do what you want with the property as long as you're not selling it. Now, another point to keep in mind here is that this is not a short-term investment. When we talk about short-term investments, we're usually talking about investments that you plan to be in and out of within 3 months or less. With redemption deeds like this, the earliest you could get out of a property would be 6 months if it was non-homestead, and it would be 2 years if it was homestead. So for non-homestead, that's not too bad. 6 months is a reasonable amount of time, but still, that is a while to be forced to sit back and wait on a property. So that may be a disadvantage to some people. For others, they may not mind it. Other things to mention about Texas. It probably requires a little bit more capital than a lot of the other states, meaning that you probably need, depending on what you're looking to buy, but I would say you probably want to have 20,000 set aside to invest in Texas. Now, also, Texas has a live on-site tax sale that they conduct on the first Tuesday of each month. So that is a regular thing they do. They're all held. They're on-site live, so you have to be there in order to participate. So those are just some of the details here about redemption deeds and how they work. If you'd like more information like this, you're welcome to visit our website, secretsoftaxlinginvesting.com, to get your free ebook, or you can visit our other site, taxsalesupport.com, where we have tax sale lists and training and things like that for members. So thank you again for listening, and be sure to subscribe.